Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. As always, I am Ryan McQueenie, a content writer here at Zach's, joined by one of our editors, Maddie Johnson.
Not as always. I'm Maddie. Sometimes I go by my full name. Sometimes I go by my middle name. No, I'm just kidding.
Yeah, no one. I don't have any. Well, I guess a lot of my friends call me by my last name. So
just McQueenie.
Yeah, that's how I've been going since like middle school.
Sometimes I go by my Instagram handle, jmads. You can follow me. My profile is public. Anyways, today
that is the first time on the whole. We've had what, like 150 episodes of this show? No, that's not even close to right. So almost 100. I feel like 85 episodes of the show, and that's the first time we've ever
talked about Instagram,
plugged a personal social media.
Oh yeah, I mean, whatever.
Yeah.
It's pretty boring. It's a lot of vacation pics and I don't really take selfies, so if you're not, whatever.
All right. So anyway,
today is February 2nd. It's a Friday. As always, we're here to recap this week's biggest stories from the investment and financial world. This week was an incredibly busy stretch for earnings announcements. Lots of tech companies, and with that in mind, we have decided to do a special type of earnings review show for you today.
Yeah, so you've seen, obviously listened to us run through tons of earnings results during earnings season in the past. So instead of doing a preview like that, we're going to take a little bit of a different approach today. We're going to be looking at the FAANG acronym, and that's with 2 A's. So this group is comprised of 5 of the hottest tech stocks on Wall Street. It includes Facebook, Apple, Amazon, Netflix, and Alphabet/Google. And it's been in the news all week as 4 out of 5 of its members reported earnings.
Yeah, and I guess you can think of maybe the FAANGs as like extra sharp now.
Yeah.
Right?
Yeah, definitely.
The double A.
Yeah.
But the odd man out was Netflix, which of course already reported. We already dug into Netflix's results on the show, actually. But as a reminder, the company matched earnings estimates on the back of triple-digit EPS growth. Revenue soared more than 30% and surpassed estimates, while user growth was a record 8.3 million in the quarter, crushing the company's own guidance.
Yeah, so that's obviously a great report from Netflix. But what we're going to be looking at today was that enough for the company to claim victory over the rest of its FAANG brethren this quarter? So the way this is going to work is we're going to run through all of our results like we typically do in a kind of earnings recap show. And then at the end, we're going to take a step back and kind of just debate or converse about which report impressed us the most. So kind of keeping that Netflix as the benchmark in mind, we're going to go through the rest of the acronyms, starting with the F, Facebook.
Yeah, so Facebook, that app on your phone that you like to scroll mindlessly on the commute bus. Or that's just me.
Yeah, or even for some people, upwards of 4 apps if you have the Messenger, Instagram, and WhatsApp downloaded.
That's true. I guess I don't have WhatsApp downloaded. I did, though, when I was abroad.
Yep, I was just going to say, if you travel abroad, it's a good one to have.
Yes. So Facebook released their fiscal fourth quarter financial results on Wednesday, and they posted adjusted earnings of $2.21 per share and revenues of $12.972 billion. Casual. Mm-hmm. So the earnings, they beat the Zacks consensus estimate of $1.96 per share. And just something to note is that, so the changes to the U.S. tax code, that tiny, small tax reform bill that passed just a few months ago. I don't know. I don't know if you've heard of it or not. That impacted earnings by 77 cents per share. So if you factor in these costs, Facebook actually reported earnings of $1.44 per share. So revenues also beat our estimates of $12.58 billion. So looking at their user base, daily active users reached an average of 1.40 billion in December, and monthly active users were 2.13 billion at the end of the quarter, which is an increase of 14% year over year. Mobile advertising revenue represented approximately 89% of advertising revenue for the fourth quarter of 2017, and this is up from approximately 84% of advertising revenue in the year-ago period. So I guess my theory is correct. Everyone's looking at Facebook on their phones now.
Yeah, definitely.
So yeah, Facebook had a really strong quarter, but they always have a really strong quarter. They always smash estimates. But I think Facebook shares actually dropped or were falling
in the immediate aftermath.
In the immediate aftermath.
Took them a little bit on Thursday morning to get into the green, and then just kind of took off for there and was up about 4% at close, a little bit higher than 4% at close on Thursday.
So like initial investor reaction,
Mixed,
these results, I guess, like they would be amazing for any other company, and they still are for Facebook, but they just maybe like weren't as great as perhaps some investors or analysts were expecting or traders were expecting.
Yeah, and another thing factored into Facebook, and I'm probably going to repeat myself over the course of the podcast because I think it's true with basically all the stocks that we're talking about, but with shares kind of trading near an all-time high, there's that pressure too. So you've got the expectations of we always post great results, plus the stock's near its all-time high, so it's going to have to be really, really great for the stock to break higher. And I think in the immediate aftermath of the report, Zuckerberg commenting about how much money they're planning on spending, or not necessarily specifics, but details about bringing new people on board. I think headcount in 2017 employee numbers were up like 50%. And I think that really underscores, to do some of this stuff that they want to do in tackling the fake news and addressing the concerns that people had content-wise, that's going to cost money, and they're going to have to bring new people on board for that. And then like the changes to the new news feed, I know Zuckerberg said a couple things about 50 million hours a day on average less time spent since that news feed changed like last month. And of course, you think logically like, well, if people are spending less time on the website or on the app, then advertising revenue is going to have an impact. Well, actually, the results speak for themselves. The results are great, and the guidance is still great, and the outlook, in the long term and the short term is still great. So I don't want to preview my answer to the end too much. I don't want to give away a super big hint here, but I really liked Facebook's report this week, and took a little bit on Thursday morning for investors to realize that. But I think a good day on Thursday for Facebook.
Definitely, yeah, and that 50 million or 50 billion?
50 million hours.
50 million hours spent less. I mean, I don't think I was one of those people who spent less hours on Facebook. I feel like I'm constantly on the app. It's like this mindless scroll of how I get my morning news. That is just me curating my news feed, right? It's liking the specific news outlets. It's, the random post from my mom, my aunt, but that's how I start my day. And then I have to check Instagram.
Yeah.
Or Messenger or whatever. So it's
basically to note too.
It's kind of a shock to me that many hours are spent less.
Yeah. So not to really creep you out here, but as much as I know we talked, off air about having not noticed the difference, really, I haven't really actually noticed a difference other than the fact that I reported on the story. So I'm kind of like subconsciously know there's a difference, but I haven't noticed a difference. I haven't noticed a difference in the amount of time I've spent on it, but a little bit goes a long way when there's 2 billion people on the app every day, basically. So what's interesting is Facebook probably knows more about how we use Facebook than we know about how we use
100%.
Facebook. So when it's talking about less time spent, for us, maybe that's like a minute a day, and we would never notice that. But, at the scale they're at, that has a big impact on totals. So, not to creep you out too much, but Facebook...
It is embarrassing how many food videos that I like watch without the sound on.
So from what I understand too is I think they're cool with those food videos, and like you said, the random posts from your mom and your aunt. that seems like what they want to focus on and what the newsfeed change was supposed to be focused on, and kind of taking you away from some of the random viral garbage that got clogged up on newsfeeds. So yeah, anyway, moving on, we're going to go to the next A here. The first A is going to be Apple. Apple was one of the wave of tech companies releasing on Thursday afternoon. It was its fiscal first quarter results. Adjusted earnings came in at $3.89 per share. That edged out the Zacks consensus estimate of $3.82 per share. Revenue figures came in at $88.29 billion. That topped our consensus estimate of $86.29. What else do we have from Apple? Apple's total quarterly revenues were up about $10 billion from the 78-ish billion that it was at last year. Net income jumped from $17.89 billion to $20.07 billion. Breaking down some geographic results, revenues in the Americas were up 10%, European sales up 14%, and then in its kind of greater China region, I believe is what it's called, or how Apple defines it, I should say, revenues were up 11%. Now, the surprising, maybe disappointing thing that I saw was iPhone unit sales. Our consensus estimate was calling for a little over 79.5 million units sold. Apple reported 77.32 million. So almost missed by almost 2.5 million from our consensus estimate. Of course, revenues, iPhone, segment revenues were up 13% year over year and touched 6.58 billion.
And we can likely thank the higher price of the iPhone X for that.
Definitely. But we could maybe also thank the higher price for the lackluster unit sales.
Right.
So it was a little bit of a give and take there. And we didn't see a huge sell-off in after-hours trading. And I think that's just because the stock's been kind of down over the last 2 weeks as reports emerged that hey guys, this iPhone X isn't selling very well.
And cutting production in half. I don't know if those rumors are 100% true, but the rumors have certainly been circulating.
Yes, definitely. And so looking forward to the second quarter, Apple expects revenues in the range of $60 to $62 billion. I also wanted to note another little disappointing tidbit from Apple's report. Services revenue. We had talked about services revenue being a key growth driver on the Tech Talk Tuesday show this week. Self-plug there. Every Tuesday, we cover some of the latest breaking news in the technology industry if you're interested. So we talked about services being a key growth driver. Last quarter, it hit a quarterly record, has been one of the fastest growing segments. Actually slipped a little bit sequentially, didn't break that quarterly record, and was also below our consensus estimate. So,
and services is Apple Music, TV.
Apple Music, Apple Care, iTunes, although I think they're kind of blending that into Apple Music and making that one at some point here. People buying stuff on the Apple TV market thing. Okay. And then some licensing fees and stuff like that.
This is kind of a little off topic from the services.
Apple Pay too, we should say as well.
Oh, yeah. I don't know if you watched the Grammys last weekend, but
I watched some highlights. The Royal Rumble was on Sunday night. So
during one of the commercial breaks, they had an Apple promo for their new speaker.
Mm-hmm. The
HomePod. And I don't know when that's debuting.
I think next February 9th, I want to say, off the top of my head.
It looks very cool.
Yeah.
Let me tell you. Very cool. So that could,
that's for those that don't know, that's kind of the response to the Amazon Echo, Google Home type of deal. It looks cooler than both of those things. And
could also it does the marketing top notch, let me tell you. But that could help with the company maybe going forward with any lack in iPhone sales.
That's
at least until they can figure out the type of iPhone that the customer wants.
Yeah, which it seems like swing and a miss on that over the past few months, even though that they gave us kind of two different options at the holiday shopping season. Numbers still weren't growing. I should note that those iPhone sales numbers were down 1% year over year. So we're talking about holiday shopping season. We're talking about iPhone 8 and iPhone X, a special edition blowout, crazy cool.
And if I'm not mistaken, this is still with the option of the Apple upgrade program. So even if you wanted to get an iPhone X, which costs $999,
Starts at
$999. Yeah. Okay.
That's $999.
Yeah, 900, not $9.99, $999. You can still do like the Apple upgrade program, which is like a 2-year financing program. So you pay a monthly fee. I don't know, stretched over 12 months with taxes and everything. Maybe it comes to around $50 something. People still didn't want to, chose not to get the $1,000 iPhone, even with the option to sign up for a financing program that would not like have you pay $1,000 right off the bat. You know what I'm saying?
Personal anecdote, was faced with the same issue a couple weeks ago. I got a new phone and I had been a Samsung Galaxy user for many, many years. I had, gone up through the Galaxy S line, I think since the 5. Spoiler alert, I have the S8 now, so I upgraded to that. But I was talking to my mom about it. I was debating what I should do, and she was like, well, it's this per month for if you get the brand new iPhone. And it was going to be, $15 more a month spread over 24 months difference. And I was just like, all right, I'll just stay with Galaxy then if it's going to be $15 more a month. Like that $15, maybe they could have got me if it was $5 more or something like that, but that $15 I just couldn't justify it. It wasn't giving me enough out of a new phone to want to justify spending that much more on it. So that's a personal anecdote. Clearly, we're talking about 2 million units below our consensus estimate. Clearly, other people faced with that situation chose the same type of situation or chose the same option. And
you're allowed to upgrade after 1 year.
Yeah.
So, it's either one, or it just comes down to the phone just isn't as compelling as what else is out in the market.
Yeah. Or isn't as compelling or isn't compelling enough to justify its higher price point. So, and I guess the numbers there speak for themselves in that, it didn't sell very well, clearly. Moving
on.
Yeah, we can move on to, we are going to go to the next A. So where this is the double A FAANG, we're going to move on to Amazon.
Ugh. And bald Jeff Bezos. Yes, Amazon, our favorite e-commerce giant. I just bought new books. I'm very excited. They're coming tomorrow.
Anything good? Anything good to read?
Let's see. I bought Beloved by Toni Morrison. It's like one of her classic books. I don't know if it won the Pulitzer, but if it did, it won the Pulitzer like 20 years ago. Oprah played like the main character or something in an adaptation again like 20 years ago. I'm trying to broaden what I read.
Fair enough. I like that you're getting books on Amazon though, because that's how the whole thing started.
Oh yeah, that's how I get all my books. What else? In like a weird like psychological thriller, like a memoir type book about like a woman that like quits her job and then goes back home, and then her dad is like dealing with like dementia.
Ooh, that's
so like right. Broad range.
I'm thinking about buying books on Amazon. I'm thinking back to like that hilarious picture of back when Jeff Bezos was like ugly and frail and tiny, and there's that hilarious picture of him like hunched over his one desk office in like the original Amazon headquarters. Everyone always tweets it out, and it's like, you can do anything you want. This is what Jeff Bezos used to look like, and now he's a half man, half robot.
Yes.
Glimmering monster of
can
billionaire.
Beam lights off his head.
Yeah. It might even be a vampire. I don't know.
Yeah,
Speaking
of
FAANG, could be a vampire.
Yeah.
I've never seen
it.
Him outside.
It would fit the picture.
I've never seen him in the daylight.
So Amazon blew it out of the park earnings wise. The e-commerce giant posted diluted. So earnings actually were a little tricky though. Diluted earnings. So they posted, I keep repeating myself, diluted earnings of $3.75 per share. And this includes the approximate $789 million provisional tax benefit, which was from the impact for the new tax reform bill. Now, if you exclude this tax provision, adjusted earnings for the quarter came to about $2.19 per share. And net income was $1.9 billion. But our estimate, our Zacks consensus estimate of $1.85 didn't take this into account, but they still
crushed it.
Like street estimates.
Yeah, sure. It was definitely a tricky one because all the other tech companies we've seen have taken like massive multi-billion-dollar charges, and we've been looking at a big difference between GAAP and non-GAAP results in a negative way, in that like some people were in the red heavily with the GAAP charges, and to kind of judge actual performance, we weren't looking at that. But in Amazon's case, it was kind of the opposite, and was confusing number crunching going on. Yeah.
So they also beat revenue estimates. The company saw revenue figures of $60.5 billion, and which beat the estimate of $59.99 billion. And this figure increased 38% year over year.
A lot of books.
A lot of books. A lot of psychological thrillers. Operating income for the quarter surged 69% to $2.1 billion. And then AWS, which is their cloud segment, revenues for the quarter came in to $5.11 billion. Now, looking ahead for the first quarter of 2018, Amazon expects net sales in the range of $47.75 billion and $50.75 billion, and this represents growth between 34% and 42%. Operating income is expected to be between $300 million and $1 billion. That's a really wide range, but
not specific.
Not very specific. So they're like, we're going to fall in between here for this metric. But Amazon, they crushed it again. But the earnings, like when I was writing the report, I was like, is this number accurate? Because it was such a big beat.
Mm-hmm. That's
but again,
always great when you have to like double check your notes.
But it's because of like that tax benefit, which was just a little wonky.
Yeah. So looking at our figure, it was still a significant beat with that adjusted numbers.
Yeah.
And then revenues topping as well. Our head of research, Shiraz, Zach's readers will be familiar with his great earnings analysis. He always likes to point us to the revenue figures as being that key indicator, because you can do all sorts of funky accounting stuff to get to whatever bottom line result you want to have. But if the business is good, the revenue figure will be strong. Revenue strong from Amazon and Amazon Web Services again this quarter.
Yeah.
When will it slow down? Possibly never. So yeah, we aren't covering Microsoft in depth this week, but I will note that we're seeing like AWS revenues climb like 40-ish% still, and we're seeing Azure still near triple digits. It was 98% this week. A little bit of a different product, kind of competitors, and at different places in their life cycle, but interesting to track those two different growth rates.
Definitely.
Gonna move on to the G now, unless there was anything else Amazon we should discuss?
No.
Shall we move on to the G and the
Let's move
FAANG?
on to G.
The G and the FAANG is actually a third A these days, which is really confusing. It's the acronym FAANG doesn't really work as well.
Really
But Alphabet Inc., aka Google, the Google parent company, is serving as our G. Also on Thursday afternoon, fiscal fourth quarter results. Adjusted earnings came in at $9.70 per share. This actually missed the Zacks consensus estimate of $10.12 per share. And then this was another company that saw a big one-time charge related to the, I'm going to use its official title, the U.S. Tax Cuts and Jobs Act, which is, they get really creative in Congress sometimes with these bills. Not a very creative name for the tax reform.
Well, they like to, it's the postcard, right?
Yeah.
Do your taxes on a postcard.
Oh,
and
goodness.
The name fits that.
Good point. I guess set the precedent early. Alphabet factoring in a big charge from from that bill. Alphabet saw a loss of $4.35 per share in the quarter. Again, we were just talking about revenues being the important thing, though. So a miss on the bottom line, but revenues of $32.3 billion. That was total revenues. Total revenues were up 24% year over year. We take out revenues to the Google Network members. So adjusting for that, revenues came in at $27.327 billion, which beat our consensus estimate of $25.65. Operating income was $7.66 billion in the quarter, and operating margin came in at 24%. Company said that aggregate paid clicks increased 43% year over year, while aggregate cost per click was down 14% in that same time frame. When we're talking about paid clicks, kind of outpacing cost per click, paid click growth outpacing cost per click decreases to see 43% versus a slump of 14%. That's a good kind of ratio there. Yeah, another decent quarter for Alphabet. I think investors in after hours trading reacting not so favorably to the earnings miss. But it seems like the core search business, which is still kind of at the core of what Alphabet is doing, is pretty healthy. We've obviously, what will grab the headlines is, I haven't fully dug into the earnings call transcript yet, but I would assume what's going to grab some headlines, anything Google is saying about the other bets, which is, you probably get an update on Waymo here soon, the self-driving car subsidiary. But, that's such a tiny, tiny little drop in the bucket right now. Other bets specifically, the only things really driving revenue there are Nest and Verily and a little bit of Google Fiber. We're talking about total revenues in the hundreds of millions when, the core search business is bringing in tens of billions.
Sure.
So that core search business, that core advertising business seems to be in good shape. Although, that bottom line miss raises some questions about spending in the quarter. My first reaction to seeing that bottom line miss was, well, maybe they were doing some other betting in the quarter, maybe spending some money on some of these projects. But yeah, interesting results from Alphabet, the company formerly known as Google.
Or are they planning a second headquarters?
Ooh. Dun, dun, dun. That would be funny if they try to steal the attention from Amazon.
Oh, they are looking to expand in some city, right?
I guess.
And Chicago was one of the rumored cities.
We have that nice building
right
down in the
west.
west.
And they want to expand. Right. It has 800 employees here in Chicago. And they're looking to expand, I don't know, one of their other head cities with a few thousand more employees. So,
well, I think this is a perfect segue to touching on kind of what the macro kind of takeaway here is from all of these. There are going to be, reactions. Reactions are going to come in however they're going to come in. There's a couple misses, couple beats. Things will go up and down over the next few days. But taking a step back, you're really seeing these big tech companies have a strong foundation to their business right now. A company like Alphabet or Facebook, they have money to go expand into cities with good talent, hire more people. Facebook in 2017 increasing their workforce by 50%. That's crazy high number for a company of that size. Apple with another record-breaking cash pile quarter. That type of stuff, it cements the fundamental financial stability of the company. It really underscores that business is booming for a lot of these tech giants. And while that's really good right now, it also means that they're kind of setting themselves up for a long-term health in the future.
Definitely.
So great news from all of these companies in my kind of take a step back macro opinion. Taking a step back to get back to the question we proposed at the beginning of the episode, going back to last week's report from Netflix, which was, kind of blew us out of the water a little bit. And looking at the FAANG acronym, out of the 5 companies in the FAANG acronym. I'm not going to say which one was the best, which one was the worst. I just want you to tell me which one impressed you the most.
Which one impressed me the most?
Yes, which is a loose word intentionally that you can take however you would like to take it intentionally.
I would say Netflix, because Facebook did it again, right? Amazon did it again. Like
Sure.
Right? The numbers were. It's like, yeah.
You're getting bored with the success.
You smash. You keep smashing the estimates, right? But Amazon, just like 2 or 3 quarters ago, they had a huge earnings miss on the bottom line.
Bezos doesn't seem to care about those
Nor
types of things.
Nor do investors.
Yeah.
So it's very up and down. That's why I guess Amazon is one of the more exciting companies to watch and see what they do. But Netflix, to me, this quarter showed, I guess, how much they're getting to grasp on their content. Just because I don't want to unsubscribe anymore. For a while there, for a lot of last year, I was really bored with it and, wanting to just, unsubscribe. But now with the content slate is just getting more and more promising, especially for 2018. And they had that huge $7 billion investment program to produce all of these Netflix original shows. It's just exciting to see where they're going to go next.
100% agreed. I'll say out of the 4 that reported this week, Facebook sticks out the most to me just because I'm so impressed by the consistency there. And I think for all the criticism that we should rightfully be giving Facebook for how it has handled the many kind of PR scandals it's been in over the past year, we're starting to see the company specifically respond to that issue and address it head on. And I think that's a good thing. The only thing more we could have asked is that they handled it better at the time. That's in the past, so they can't change the past now. What we now have to ask for as the user of Facebook is to improve things going forward, and I think the company is doing that. And then from an investor's perspective, what Mark Zuckerberg has been doing for years now is absolutely remarkable. And I think it's time. He's still young, but I think it's time that we start including him in our conversations of the tech industry leaders and really just the big business corporate leaders. Best ever conversations in when you look at what Zuckerberg has done to deliver value to shareholders time and time again over the past several years. It's almost unprecedented. However, I will agree with 100% that I think I'm most impressed with out of these 5, out of the FAANG with 2 A's acronym, has got to be Netflix. We're talking about how many years has Netflix been the video streaming king? How we've had almost a full year now where they've been finished with their international expansion. So it's not like they had soft year-over-year comparisons. We're talking about 8.3 million users in one quarter, a record quarter. Amazon is witnessing a record quarter of user growth in 2017. That's crazy to me. Tip of the cap to Reed Hastings and the content development team over at Netflix. And I do think it's content. They think it's content.
Yeah.
That's what they were talking all about in the press
The Crown
release.
is one of the best shows ever. I'm just putting that out there. Season 6 of House of Cards is coming back this year.
Oh,
Fingers
yeah.
crossed.
Well,
they just
minus a specific character, but yeah.
Duh. They just added Diane Lane and Greg Kinnear to the cast.
I saw that.
It's going to be amazing. Robin Wright is a queen. Let's just give it. I mean, it's just going to be great.
Yes. So speaking of crowns, though, I wish you would have finished with The Crown being the best show ever, because then I could have more accurately made the speaking of crowns, The Crown goes to Netflix for
Well,
this.
did you hear that Helena Bonham Carter is going to take over the role of Princess Margaret?
I did not know that.
You did now, and she's going to kill it.
Well, they're doing a great job casting things. They're doing a great job making amazing content. They're doing a great job attracting new users. Netflix, like I said, tip of the cap. That does it for us this week, though. As a reminder, this one, we said some things in this episode. So if you disagree, Especially if you disagree, feel free to shoot us an email at podcast@zax.com.
But if you disagree on the crown, I mean, it's over.
Save it. Yeah. You can also check out all of our other exclusive audio content at zax.com/podcasts, including my show, The Tech Talk Tuesday, that we mentioned this week. Remember to subscribe and leave us a rating on Apple Podcasts. Thanks again for joining us, and we will see you next time on Zach's Friday Finish Line.